Welcome back. In today's video, we're going to talk about the latest housing market update according to Redfin, just posted last week. We're going to give you an update regarding housing inventory, home sales, home prices, and rates, of course, and of course, much more than that as well. So let's go ahead and dive right in. I have a lot to share. This was just posted on September 12th. It says here, falling rates mean housing payments are now more affordable than they were 1 year ago, despite higher home prices. So question for you guys, why is it more affordable then? And the answer is, of course, that rates have been coming down. Right now, we're around a 1.5 year low regarding the average 30-year fixed rate. And more than that here in a little bit. So falling rates have pushed the median U.S. housing payment down to nearly its lowest level since January this year, but pending home sales have yet to improve. So we're seeing rates decreasing, yet we're seeing contracts being signed between buyers and sellers, or pending home sales still down compared to 1 year ago. And this is pretty remarkable because 1 year ago, rates were more than 1 percentage point higher than they are today. So back up here, we have demand less today than it was 1 year ago, even though rates have fallen by more than 1 percentage point. So many would-be home buyers are hoping rates will fall further, and others are waiting for the clarity around the new NAR rules. I personally haven't seen a whole lot of changes regarding this new NAR rules, regarding how transactions are taking place. But if you guys are seeing any changes in your neck of the woods, then please leave me a comment below. We all know that we have to have a buyer broker agreement signed between buyer and seller, or buyer and a buyer's agent prior to looking at any houses, but I haven't really seen any changes other than that. But of course, that could vary by the region. In any case, housing payments are falling because rates are falling. So weekly average mortgage rates and daily average rates have both dropped to the lowest level in over 1 year. So rates today, as of Monday, September 16th, are basically at the lowest level since approximately February of 2023. So again, here they're saying that rates have dropped to the lowest level in over 1 year in anticipation of the Fed starting to cut interest rates. So the current projections for the Fed to cut rates, which their next meeting is this Wednesday, I keep on saying December, September 18th, they're actually calling for a 50 basis point rate decrease by the Fed, and that's controlling the federal funds rate. So I get a lot of comments saying that, hey, once rates decrease, I want to see how much mortgage rates decrease as well. But the current rates we're seeing today for average 30-year fixed rate, any type of mortgage rate, have already taken into consideration future expectations of Fed cuts by the Fed. So it's not like the Fed's going to cut rates by 25 basis points or 50 basis points on Wednesday, and suddenly rates are going to decrease by that same amount. That's not how it works. The rates we're seeing today have already baked into a consideration of future expectations for Fed cuts. One thing that could kind of change the dynamics this Wednesday, though, is that Wednesday, the Fed is actually going to provide the projections for the federal funds rate over the next couple of years. And based on that, that could change mortgage rates on Wednesday. So for example, if the Fed members have projected that we're going to see much lower rates than expected over the next coming months, or coming years, I should say, that could cause mortgage rates to decrease on Wednesday, not due to the fact that the Fed is going to cut rates by 25 to 50 basis points on Wednesday. In contrast, if those projections by the Fed tell us that the Fed wants to have a higher for longer interest rate environment, that actually could cause mortgage rates to increase on Wednesday. And of course, I'll definitely keep you posted with the latest developments on that. Going back to Redfin's report, it says housing payments would be falling further if not for stubbornly high home prices. So we still have very high home prices, very close to all-time record highs on a national level. But the reason why housing payments or housing affordability has improved is because of rates decreasing over the last month or so. Speaking of home prices, the median U.S. home price or home sold price was just over $388,000. That's up by 3.7% year over year, and just a few $1,000s shy of July's all-time record high. Home prices remain elevated despite slow sales partly due to limited inventory. So this is very much regional. In Texas, Idaho, Florida, for example, they have a lot more, actually not a lot more, they have more houses for sale right now compared to the same time frame in 2019. Whereas in California, where I live and work as a real estate agent here in the greater Sacramento area with my team, there's approximately 35% fewer houses for sale compared to 2019. It's actually worse in the Northeast. They have approximately 70 to 80% fewer houses for sale, whereas in Texas and Florida, they have more homes for sale from 2019. And coincidentally, the areas that have inventory very close to pre-COVID levels or higher than that are areas in which home prices are going down or are flat. And of course, areas in which we have a lack of housing, that's of course areas we're still seeing elevated home prices. In any case, the total number of houses for sale nationwide is down nearly 30% from pre-pandemic levels. And while it's still up by 16.7% from 1 year ago, that's the smallest year-over-year increase in about 5 months. This is something I've been talking about on the channel for quite some time. I would say for the past 3 months, because we're not seeing new listings skyrocketing. And because of that, we're not seeing inventory skyrocketing as well. So we're basically seeing this stagnation of growth rate of inventory levels. And in fact, when I share inventory according to Redfin, they're showing here that inventory is actually going down right now. So we're kind of seeing this seasonal effect regarding inventory levels right now because inventory tends to peak in the late summer months. All right, let me give you guys an update regarding mortgage rates. So a 30-year fixed rate, the average rate according to the Mortgage News Daily, 6.12%. That's a 2 basis point rate decrease compared to Friday. Jumbo is at 6.4. FHA and VA loans is just under 5.7%. So looking at the average 30-year fixed rate, 1 year ago, look at that. 1 year ago, we're at 7.29%. So rates have decreased by 117 basis points or 1.17 percentage points compared to 1 year ago. Obviously, we're much lower compared to the peak, which was back in October last year at 8%. Now we're at just over 6.1%. So at 6.12%, that's basically the lowest rates we've had going all the way back until February of 2023. Like I mentioned at the very beginning of this video here, the decrease in rates hasn't caused a lot of activity of home buyers. We're not seeing a huge increase in pending home sales. And of course, we're still seeing relatively low levels of people submitting applications for home loans to buy houses. So here is a really good snapshot looking at the MBA's purchase index, which by the way is seasonally adjusted. This is basically a way to look at the number of people nationwide who are submitting applications to buy houses using loans, of course. And here's a really good snapshot looking at the decrease in rates and the index. So of course, a high index means that there's a lot of people submitting applications. And of course, a low number means that there's a lack thereof, right? I want to share this because this is a really good way for you guys to look at this on your own. And what I found, this is on the Mortgage News Daily's website, I'll provide a link below, is that their data tends to be a little bit lagging because sometimes their charts here are not updated. So the most recent trends we have from them is actually for the week of August 26. So the week of August 26 was the week ended August 30th. But the most recent trends we have from the MBA is actually for the week ended September 6th. There probably is not a lot of movement week to week, but we don't have the most updated numbers here. But just keep that in mind. If you guys go to this website, which by the way, you have to scroll down here to their purchase index. Just look at the date there. That is the week of, or that should be a Monday, August 26th. I believe that is a Monday. Yeah, it's a Monday, the 26th. So the MBA's reports looks at the week ended, which would be August 30th. So they're missing 1 week. In any case, I digress. I want to mention this because I really want you guys to be empowered to look this up for yourselves as well. So take a look at this. The rate as of, when was this? April 29th, the average 30-year fixed rate was around 7.22%. The purchase index was at 141.7, and rates have decreased by about 1 percentage point ever since April this year. So a big decrease over the past several months. But when I take out this, just to make it easy to see. Look at that. I mean, their index has basically been flat ever since then, despite the fact we're seeing a huge decrease in rates over the past several months. So this is very much a forward-looking indication of closed home sales because, of course, the first step if you're looking to buy a house is to get pre-approved for a loan from your lender, right? So this is very much a look at. There's not a lot of people who are submitting loan applications right now, and therefore this would imply that buyers are not, racing to their lenders to get approved for a loan, because even though rates have decreased from 7.2 to around 6.1%, we're not seeing a whole lot of activity. In fact, their purchase index has actually decreased. It went from 141.7, now it's at 131.8. So demand decreased even though rates decreased since April this year. All right, getting back to Redfin's report, here's a look at their application index. Again, seasonally adjusted. That increased by 2% from 1 week ago, but it's down by 3% year over year. That's according to the MBA. Something they do not mention in this report, though, a decrease of 3% compared to 12 months ago is the smallest decrease in at least the past several years, going back to 2021. The previous week was down by 4%, and based on my own research, I spent about half an hour 1 week ago, a decrease of 4% year over year was the smallest year over year decrease since November of 2021. So this decrease, let me just kind of break this down. We have a low level of people submitting applications to buy houses, which implies that we're going to see a low level of closed home sales in the coming months. And on top of that, it is down by 3% year over year, but that's the smallest year over year decrease since at least the past several years. So in other words, a small decrease already based on a small amount of application numbers, if that makes sense. Also, another leading indication is Redfin's Home Buyer Demand Index. That, of course, is a measure of tours and other home buying services by Redfin agents. That was up by 5% from 1 month ago, near its highest level since May, but it was down by 7% year over year. So again, this all implies we're going to see a low level of closed home sales in the coming months. So let's have a look at their key housing market data. For the 4 weeks ended September 8th, they look at 400 plus US metros, and their weekly data goes back to the year of 2015. So if you hear someone say all-time record highs or all-time record lows, again, Redfin's data only goes back to the year of 2015, and it is subject to revision. So let's talk about the median sale price. $388,000, up by 3.7 year over year. We're only about $6,000 shy below the all-time record highs that was set during the 4 weeks ended July 7th. So still elevated home prices. Asking prices are up by 5.4, and your average monthly housing payment is down 1.3%. That's the second biggest decrease since May of 2020. The biggest decrease was the week of August 25th this year. So again, housing payments are only down because of rates going down, because of course home prices are up by nearly 4%. Meanwhile, new listings increased by 4.6%. So we're not seeing a giant surge of people listing their houses for sale. And active listings, which is the amount of houses for sale nationwide, was the smallest year-over-year increase since April this year. The month supply is at 3.8 months. That's an increase of 0.8 months from 1 year ago. According to Redfin here, a 4 to 5 month supply is considered balanced. In my personal opinion, it really depends on where you're coming from. Back in 2022, we had around a 8-month supply, or a 0.8 month supply. So a lack of inventory, but also a huge increase in sales. And that's why the month supply was at very, very low levels. But even though home prices decreased in the last half that year, we still didn't even get close to a 5-month supply. That's why I'm mentioning that. Let's also have a look at how each of the 50 most populous metros fared as well. So home prices, Milwaukee, Wisconsin led the nation, up by 11.6%. Then we have Providence, Rhode Island, Nassau County, New York, New Brunswick, New Jersey, and Fort Lauderdale, Florida, up by 7.9%. So it decreased in 8 of the 50 metros. So of course, 32 of the 50 biggest US cities posted gains year over year. Austin, Texas, of course, led the nation once again by the biggest decrease, down by 4%. Then we have Fort Worth, Texas, Dallas, Tampa, and Jacksonville, Florida. In regards to pending home sales, a measure of contracts being signed between buyers and sellers, that increased in 13 metros. So the biggest increase was actually in San Jose, California, up by 7%. Then we have Boston, Cleveland, Indianapolis, and San Antonio. In contrast, the biggest declines, look at that, West Palm Beach, Florida, down nearly 20%. Then we have Miami, Fort Lauderdale, Florida, Cincinnati, and Atlanta, all down by more than 13%. In regards to new supply hitting the market or new listings, that rose the most in Las Vegas, up by 19.1%. San Diego saw an increase of 18%. Then we have Phoenix, Anaheim, and Houston. In contrast, the biggest decrease of new supply hitting the market is Atlanta, Georgia, down 19%. Then we have Austin, Texas, down by 11%. Nassau County, down by 8.1%. San Francisco, down by 7.1%. And Chicago, down by 5.9%. Looking at Redfin's data center regarding new supply hitting the market, that rose by 4.6%. There hasn't been a whole lot of movement. In fact, it's been going down ever since June, which, by the way, is normal, as you can see in previous years, which, by the way, orange is 21, here's 22. The yellow line is this year, and of course, last year is in blue. So we're up by 4.6% year over year, but this is actually much lower than the spring home buying season, where new supply in the market was up by around 7 to about 13%. And because new listings have basically been losing momentum over the past several months now, that's one of the reasons why we're not seeing inventory absolutely skyrocketing. And in fact, let's have a look at that right now. That's active listings, which is right there. You can see that active listings peaked during the 4 weeks ended August 4th this year at 1 million houses for sale. Now there's only 996,000. That is at least a 3-year high right now, but it's only up by 17% year over year. And this is much less than the peak, which was around 23% during the early summer months this year. Also at 16.7%, that's the lowest increase since approximately April this year. So right now we have approximately 17% more existing houses for sale right now. So let's take a look at pending home sales. Buyers getting their offers accepted. Look at that. It's at least a 3-year low right now. So even though we have more homes for sale right now, more new supply hitting the market, pending home sales are down by nearly 8% year over year. In regards to the month supply, again, that's at 3.8 months. This is at least a 3-year high right now. The trough during the same time frame over the past several years was back in 2021. At that time, the month supply was only around 2.2 months. Now it's at 3.8 months. Quite a bit higher compared to the past couple of years as well, when we were sitting at around a 3-month supply. Let's also have a look at how fast or how slow houses are selling right now. So days in the market's at 36 days. This is at least a 3-year high as well. 1 year ago, it was taking approximately 30 days to sell a house. Now it's about 6 days longer right now. Much different compared to January through approximately April this year, when houses on average were selling faster compared to 2023. But ever since May, houses are taking longer to sell from last year. In regards to the share of price drops, according to Redfin, that's at 6.6%, quite a bit higher compared to the past several years, and it's at least a 3-year high as well. Looking at 6.6%, to start the year, we're at 3.5%. In 2022-21, the share price drops was basically only at 1.7%. So we basically started at elevated levels this year as well as last year. And lastly, let's have a look at the average sale price to final list price ratio. We're at 99%, which means out of all the houses that did close escrow or the sale was finalized, they sold for 0.1 percentage points less than the seller's final list price. Back in 22 and last year, that ratio was around 99.5%, which means houses on average sold for 0.5 percentage points less than asking. Now they're basically 1 percentage points less than asking right now. This is also way lower compared to the same time frame in 2021, when houses on average were selling 1% over asking. And with that said, please comment below with your biggest takeaways from today's video. And if you want a real estate agent referral, please email me at jason@meetjasonwalter.com, or you can check out my website to apply for a loan or to submit an inquiry as well, and that is realestateteamfinder.com. I'll provide a link in the video description below. Hope you guys have an awesome day and look forward to seeing you on the next video.